Good, guys. We're here with another trade recap from today. It is December 17th, 2025. Not much news this morning that we should be wary of, but so we'll start with the daily profile. We can see Asia session kind of comes up, kind of just slowly goes up, but London session, on the other hand, they come up here, they don't get these 1 hour highs, and it starts to reverse. That's on the NASDAQ, but if we go to the S&P 500, we can see that, hey, Asian session slowly went up, same thing, but let's see, hey, London session comes up and manipulates these highs, and then begins the start of a reversal with right here, because this is New York pre-market, these two candles. So my daily profile is London manipulation of these 1 hour highs and then a reversal. So basically what I'm looking for is a continuation downtrend on the 5-minute time frame. So on the S&P 500 here, we can see that price starts to come down, and then we start making a high. So basically what I'm looking at is from this high to this high, or from this high to this low, I'm looking for we either bounce off of a fair value gap, which we have one right here, or we hit the equilibrium, which we hit on S&P here, just above this green line. But on NASDAQ, let's go to the 5-minute. We can see that same thing. We come down here, there's this big fair value gap here and a smaller one right over here. We come down, we tap into the fair value gap, and then this is where things get tricky. So we, on the 5-minute, we tap in here, but on S&P we actually break structure to the upside, which is kind of a tough confluence to trade off of. But I knew to stay with my lows and shorts. So let's go to the 1-minute time frame here. I actually took the trade on the S&P 500 because it had easier draws to these lows that NASDAQ already took out, these Asia lows right here. So that's why I traded the S&P, and we ended up going down to these lows here. But the entry that we had was, well, ideally we came up here and we took out these we basically popped to this fair value gap, or equilibrium, and then we have this inverse fair value gap, or fair value gap right here that we inverse right here, but there's still one more that we would need to inverse to continue down, which on NASDAQ we actually did inverse both of those gaps. As you can see, gap 1 here, we inverse that one, and gap 2 we inverse there. So that tells me there's a potential entrance here on NASDAQ, but I was more leaning towards the S&P. So again, we didn't inverse that. We actually made an SMT with a higher high there, lower high here. So basically I was waiting patiently till we got another confluence that met our things on the S&P 500. We actually ended up getting a break of structure right here, and I put my stop loss at these highs, and my take profits were at these Asia lows and these daily lows from yesterday. So I had a 2.75 risk reward, which we hit, which was a good trade. But on the NASDAQ over here, I didn't think we were actually going to go all the way down to here, because from there it was like a 1% drop we were going to have. So I took the ES and we hit, and I mean, hey, we won. But NASDAQ was a 1 to 4 trade, which is actually would have been a really good trade. But I mean, I can't complain. I made bread. So one of the things I'd like to note is that though on this move up we tapped in the fair value gap, one of the things rookie traders do, or beginner traders do, is that, hey, they see a break of structure here on this index to the upside, so they're going to be scared and say, okay, I think we're going higher, I shouldn't take this trade. But we should basically base our we should have more favor in technical analysis and our bias Then we do our emotions, because emotions don't mean anything but just it's just luck with emotions. So I stuck with my technical analysis, good risk management, good risk to reward ratio, and it paid off. So I'll continue posting daily recaps and stuff like that. So keep watching them, keep liking them, and I'll see you boys. Peace.